Hey, welcome back. In today's episode, I'm going to go through Bitcoin Layer 2 solutions. So before I actually jump in, I'm going to give you an introduction as to why we have Bitcoin Layer 2 solutions, why they're needed, why they exist. And really, if you go at the top of this article, which is rather interesting, because I'm always into looking at what is the evolution of Bitcoin, because it's a $2 trillion plus ecosystem. So Bitcoin is becoming slowly but surely a growing monetary asset at a global scale. So this is something that is really hard to ignore now. So if you haven't actually parked some of your fiat wealth into Bitcoin, well, hopefully this episode will give you more of an eye-opener as to what the true potential is behind these Bitcoin Layer 2 solutions. So before we jump into what those are, those coin projects, I want to give you why we have Layer 2s to begin with. Now, it all goes back to its very foundation core that Bitcoin is a Layer 1 solution. And with most Layer 1 blockchains out there, they have a series of shortfalls, very important shortfalls, as it says here, that Bitcoin has indeed been known as that digital gold and is increasingly becoming a digital gold, a digital commodity in the world out there. It's a secure and reliable store of value. So we are starting to see a lot of perhaps baby boomers, even myself as a Gen X, scratching our heads and realizing and even recognizing that there is something much harder, much more pristine than gold, which is Bitcoin. So its original design sometimes struggles with speed and high transaction fees, because just to recap, the fees are in the over $10, $20 originally per transaction fee. So that means every time you commit a transaction on the Bitcoin Layer 1 network, you're going to be worried about having to pay those $10 to $20 fee per transaction. But it's not just the hefty transaction fees that is an issue with the Bitcoin Layer 1. It's also the speed. It takes 10 minutes. So every 10 minutes, a new block gets mined. And within each block, it accommodates a series of transactions, and the entire block gets mined every 10 minutes on the blockchain Layer 1. So these are the two major shortfalls behind Layer 1 and why we are seeing a plethora of Layer 2 solutions come in to resolve those shortcomings. So these innovative protocols work alongside Bitcoin's leading network to handle a much larger number of transactions quickly at a fraction of a cost, making everyday payments and advanced financial applications more practical for everyone. And when I mean everyone, I mean everyone at all walks in life. So just to wrap up, they're secure and reliable, but sometimes struggles to carry enough passengers, or in this case, transactions at one time. So Layer 2 solutions are like special high-speed carriages attached to the engine. They help bring more people faster and at a lower cost without overloading the main engine. So that is an analogy that best describes what are these Bitcoin Layer 2 solutions. These solutions work by moving many transactions off the main Bitcoin chain, i.e. off the Bitcoin Layer 1 network, and then settling them on the chain later. They allow Bitcoin to process millions of transactions per second, which is a big deal when considering using Bitcoin for those everyday payments, DeFi apps, and other innovative services. Now we're going to go into what are the top 10 Bitcoin Layer 2 coin projects that we are seeing in 2025. So let's start with the Lightning Network. You probably have heard Lightning. It's now being rolled out in major supermarket chains like Spar. I gave, in fact, a video that actually showcased a gentleman walk into a Spar supermarket in Switzerland where he's actually made the grocery payment using his Lightning wallet, which is rather interesting. If you haven't tapped into that video, I would suggest that you subscribe to my channel in order to view that video, which is an eye-opener. It's something that is deployed around the world and it's going to be picking up speed and momentum in the months and years ahead. So Lightning Network is that golden star, that rising star of the Bitcoin Layer 2 solutions. It helps create special channels where people can send money back and forth without having to record each small payment on the main Bitcoin blockchain. That is the fundamental use case behind this Lightning Network Layer 2 solution on the Bitcoin network itself. So you can think of it like opening a tab at your favorite coffee shop. You pay once at the end instead of paying for every cup of coffee. So just to sum up this Lightning Network protocol solution, it enables fast transactions, i.e. payments on the Lightning Network happen in an instant. No more waiting for confirmation times that can sometimes take minutes, every 10 minutes to be precise. It also facilitates lower fees. So because most of the activity happens off the main blockchain, fees are much lower as a result. It's like having a discount on your everyday payments. In terms of scalability, it provides the ability to theoretically handle up to 1 million transactions per second. The Lightning Network is indeed designed to grow with the needs of users worldwide. As more users adopt the Lightning Network, will help reduce the transaction fees even lower, which is ultimately what this Lightning Network scaling solution is all about. So in terms of the innovations for this year in 2025, there has been some recent upgrades like smarter routing protocols and easier wallet integrations have made the network even more user-friendly than ever before. New features allow for better privacy and more secure channels that help protect your funds even further. So why is this important for you? For regular Bitcoin users, the Lightning Network allows them to send and receive money fast without worrying about exorbitant transaction costs. This is especially critical for retailers, freelancers, and anyone who intends to use Bitcoin daily. Remember, I made a mention about the Spar retailer, the supermarket chain in Switzerland, where I made a video showing a gentleman approaching the counter's checkout and made the payment using its Bitcoin Lightning wallet. So it just comes to show this is alive and kicking. The next interesting Bitcoin Layer 2 solution is MAP protocol. What is MAP protocol? It's built with zero knowledge technology and it focuses on making Bitcoin transactions secure and private. So that is ultimately the use case. So this zero knowledge technology is rather an important integral feature which enables Bitcoin transactions to become more secure and private. It enables peer-to-peer simplicity in that the MAP protocol is intended to conduct transactions directly between users with no intermediaries. This ensures both security and fairness. In terms of easy integration, developers love MAP because it has a software development kit, an SDK, and an application programming interface API. This makes it simple to build new Bitcoin apps without reinventing the wheel. It also enables connection with various blockchain networks and with other crypto assets. And finally, in terms of enhanced security, it achieves this by leveraging Bitcoin's main chain, the actual layer 1. The MAP protocol provides a robust platform for financial apps, DeFi projects, and more. So the advantage of this layer 2 solution is MAP protocol has indeed become a trusted solution for many businesses and developers alike. Its ability to integrate Bitcoin's strength with modern tech tools means it is well on its way to being a standard for new Bitcoin powered applications. So to summarize MAP, just think of it as a solution that enables more secure transactions and, more importantly, to make it more private. That for me is the fundamental advantage over the use of MAP protocol. And also it would facilitate and transcend these features of security and privacy in terms of rolling out new Bitcoin apps, new Bitcoin Layer 2 solutions, Layer 3 solutions onto the ecosystem. So I would expect the MAP protocol to become that enabling feature, kind of a protocol rather than an actual standalone solution. So this makes total sense. The next one on the list, number 3, is Stacks. So what is Stacks? Stacks is unique because it brings the power of smart contracts to Bitcoin. If you recall, Bitcoin in its origin and it's by design was never meant to be known as a programmable smart contract blockchain. You usually have Ethereum and Solana, which are still the leaders. In the advent of its upgrades, recent upgrades, it has introduced a couple of solutions, that would enable that smart contract capability within the Bitcoin ecosystem itself, which is what Stacks is about. So it goes on to say that smart contracts are like little programs that run automatically when certain conditions are met. They open up a world of possibilities, from automated payments to decentralized applications, those famous dApps. So just to go slightly onto the covers, which I think is an important aspect, proof of transfer, this clever mechanism, uses Bitcoin itself to secure transactions on Stacks. Users bridge Bitcoins to the Stacks network, which in turn powers smart contracts on top. So Stacks uses a simple programming language called Clarity. It's designed to be safe and predictable, making it easier for developers to create apps that interact with Bitcoin. In terms of its security, even though Stacks run in its own network, it benefits from robust security of the Bitcoin blockchain itself, making it a reliable choice for those who care about safety. And finally, what are the growing use cases of Stacks? Well, it stems from decentralized finance and non-fungible tokens to social networks built on blockchain, SocialFi. Stacks is powering a diverse range of applications and use cases. So what does this mean for use in 2025? It says that Stacks have grown in popularity because they allow users to enjoy the benefits of smart contracts without leaving the Bitcoin ecosystem. That is the beauty of the design and elegance of the Bitcoin ecosystem. There is that separation because it's a $2 trillion market cap on the base layer 1 of the Bitcoin network. We don't want that to be tampered or changed. So it's important to retain the sovereign independence of that layer 1 from the rest of the rollout features and apps on layer 2s and layer 3s. So that is another advantage of why layer 2s are so important. It also says here that it helps bridge between Bitcoin's reliability and the innovative potential of modern blockchain apps. The next one on the list, which I find interesting, is Merlin Chain. Merlin Chain is another exciting project that will expand Bitcoin's capabilities. It is built to support a wide range of decentralized applications, including those for finance, art, gaming, and social network. The features that it provides here is EVM compatibility. EVM stands for Ethereum Virtual Machine. So what this Merlin chain tends to act as a bridging mechanism between Bitcoin and the Ethereum-like blockchains or sidechains. You've got Ethereum, you've got Arbitrum, and so on. So it's trying to enable developers to readily transfer apps, if you like, created for Ethereum with Bitcoin ecosystem through this Merlin chain. It provides native support for ordinals. So ordinals allow you, in effect, to track and manage digital collectibles on blockchain, a feature that has caught the eye of NFT enthusiasts. It also provides a much diverse app ecosystem. So whether you're interested in DeFi, non-fungible tokens, NFTs, gaming, or social media, Merlin Chain has a growing ecosystem that caters to all. Its compatibility with BRC20 Bitcoin's version of tokens ensures that it stays relevant in the expanding crypto world. And finally, it provides that user-friendly experience, which is always important, particularly when we want to adopt a growing user base. So what is its impact of this solution in 2025? Well, Merlin Chain will become a hub for many innovative projects. Its ability to combine Bitcoin security with modern app features makes it a go-to platform for many developers and users alike. Now moving on to another important Bitcoin Layer 2 scaling solution is called Liquid Network. It's one of these early day Layer 2 solutions, been launched in 2018, where Liquid Network remains one of the most trusted sidechains in the Bitcoin ecosystem. It was built to help with faster transactions and token issuance, and in 2025 it will continue to be a much reliable option. So the advantages of Liquid works alongside Bitcoin by operating as a separate blockchain pegged to Bitcoin. Now this allows users to trade tokens much faster and with more privacy. In terms of its built-in privacy Liquid's standout feature is its focus on privacy. It hides transaction amounts to keep your financial details confidential. So that is an important privacy aspect that this Liquid network provides to its users. In terms of token issuance, Liquid makes it easy to create and trade tokens. Whether you're a business or an individual, you can use it to issue digital tokens that increase Bitcoin's value. And in terms of steady growth, the network has grown steadily, increasing its liquidity and attracting more users who appreciate its speed and privacy features. Now, why Liquid network still remains relevant today? Well, it's given its longevity and proven track record, it is still at the forefront of Bitcoin Layer 2 solutions. With its strong ties to Bitcoin, it provides a balance between speed, privacy, and security. Now, moving on to the next important scaling solution, it's called Rootstock. It is often called RSK. It is a platform that brings Ethereum-like smart contract functionality to Bitcoin. This is actually similar to Stack. So what are its features? Its clever trick is using merged mining, which means Bitcoin miners can mine both Bitcoin and RSK simultaneously. This adds an extra layer of security. In terms of its smart BTC, Bitcoin is wrapped into an RBTC token on Rootstock. This token is used for transactions, fees, and smart contracts. In terms of its EVM compatibility, because Rootstock is compatible with Ethereum virtual machine, this means that developers can use many of the same tools that they currently use on Ethereum. This helps speed up the development of new apps. In terms of its growing ecosystem, with a wide range of applications from decentralized finance to decentralized exchanges, Rootstock is building a robust ecosystem that appeals to new and experienced users. So what is its broader landscape for this year in terms of Rootstock adoption? Well, it will continue to bridge the gap between Bitcoin security and the innovative possibilities of smart contracts. Its strong relationship with Bitcoin makes it a favorite among users who want the best of both worlds. Dovi is a project that has gained a lot of attention for its strong community focus and its seamless integration with Ethereum virtual machine. It's designed to be scalable, efficient, and secure, making it a top choice for those looking to build new apps on Bitcoin. So in terms of its features, its forefront mantra, if you like, is community first. Dovi was built with the community in mind. The project is open, transparent, and has a strong focus on user input, user feedback. Dovi integrates advanced cryptography like SHA signatures, which add an extra layer of security to everyday transaction. It enables users to benefit from fast transaction speeds and higher levels of privacy. Now, this makes Dovi an attractive option for both personal and business use. And finally, in terms of asset diversity, Dovi supports different types of tokens, including ARC20 and BRC20 tokens. This flexibility means that users and developers can work with a wide range of digital assets without switching platforms. So I think that is an important feature. We are starting to see there is a commonality amongst these layer 2 solutions in Bitcoin in the way that they are trying to interoperate alongside other side chains outside Bitcoin. We've got Ethereum, which is handled through EVM interoperability, and similarly with Solana, and similarly with other non-Bitcoin, non-Ethereum-like blockchains. So this is going to be a growing theme that I would suspect to see not in 2025, but in the years to come. So the role of Dovi in 2025, it has become one of the most loved Bitcoin Layer 2 solutions. Its emphasis on community and security means that users feel confident using it for everything from small payments to large financial contracts. The ease of integrating with other systems and the strong support network make Dovi a standout choice. Now, moving on to Layer 2 solution number 8 on the list, CKB Public Chain. It says here that it's unique in that it focuses on using its native token, CKB, for more than just payments. This chain is built to help manage resources, pay for transactions, and even govern the network. So what are its features or benefits? In terms of utility and governance, the CKB coin is at the heart of the ecosystem. It is used to pay for network fees, manage resources, and even have a say in how the network runs. This means that owning CKB gives you a stake in the future of the platform. Proof of work security, just like Bitcoin, CKB is designed using proof of work, which means it relies on the same kind of robust security measures that protect Bitcoin. The next feature, it says here that CKB is built using RISC-V technology, which is designed specifically to make the network more efficient and faster. It's a neat trick that helps keep things running smoothly. That's pretty much what it is. And then finally, as with most layer 2 solutions that we were seeing, in terms of its cross-chain capabilities, CKB makes it easier to move assets between different blockchains, making it a valuable tool for developers and users alike. So why CKB stands out in 2025? Well, it has carved out a niche for itself as a platform that goes beyond simply useful payments. Its focus on utility, governance, and indeed cross-chain transfers makes it a powerful tool in the expanded world of Bitcoin-based solutions. And then the penultimate solution, number 9, called Tectum. This is a new one that I haven't seen before. Tectum is known for its incredible speed. With a capacity to process up to 1 million transactions per second, it's designed for users who need fast and efficient transfers. Tectum's technology ensures that transactions are processed almost instantly. This is especially useful for businesses and for those everyday users who want their payments to clear quickly. In terms of proof of utility consensus mechanism, instead of relying solely on traditional mining, Tectum uses a proof of utility system. This not only speeds up the network, but also makes it more energy efficient. In terms of its capacity to earn passive income, a standout feature is the ability to earn rewards by staking Tectum's native token called TET, T-E-T. Users can earn up to 20% returns, which is attractive for people looking to get a little extra out of their crypto holdings. Tectum's soft notes feature allows users to make quick payments that are backed by Bitcoin or other assets. This means you get the security of Bitcoin with the speed of Tectum's network. So what is its impact for this year in 2025? Well, Tectum is more than just a payment network. It's a way to earn while you're using a fast and secure system. By combining lightning fast transactions with passive income opportunities, Tectum has become a popular choice for both tech enthusiasts and everyday retail users. Which leads now to the last scaling solution in Bitcoin, which is BEVM. It's designed to simplify the creation of smart contracts and other decentralized apps using Bitcoin for its gas fees. So this is like the third smart contract sidechain that works similarly as with Rootstock and Stack. So between those three, these are the ones that actually ultimately provide that smart contract programmability capability on the Bitcoin ecosystem itself. It says that EVM compatibility, BEVM, makes it easy for developers who are used to working with Ethereum to build apps. This means that many of the tools you already know work with BEVM, lowering the barrier to entry, which is important in terms of its adoption. Unlike many other networks, BEVM uses Bitcoin for gas fees. This ties the network directly to Bitcoin's strong security and stability. With support for up to 1,000 consensus nodes, BEVM offers a decentralized way to validate transactions, which increases security and trust. And lastly, in terms of its growing dApp ecosystem, BEVM already hosts a variety of decentralized applications, anywhere from exchanges to liquid staking solutions, and it plans to expand its offerings further. Including a decentralized Bitcoin FX protocol. So what is the BEVM edge in 2025? Well, it has become a favorite among developers who want to build Bitcoin-powered apps without actually losing the features of the Ethereum ecosystem. Its blend of security, ease of use, and strong community support system makes it a standout option in the growing world of Bitcoin Layer 2 solutions. So really, you can see that there is a growing commonality and marketplace need for the Bitcoin ecosystem to actually expand itself and to work interoperably with other non-Bitcoin blockchain systems, whether it's Ethereum, Solana, or any other blockchain network out there, which I think is a key trend that we're going to be seeing in terms of its evolution. Because if I go and show you this global wealth map, as you can see here, it's currently hovering around $900 trillion, and that is the makeup of that global wealth. It's predominantly held in gold, which is $16 trillion market cap, followed by arts and collectibles, around 24 trillion between them, equities and stocks, 115, real estate, which is the largest. This is pretty much the houses that we live or we use it to invest. It's 330 trillion, bonds, which is another heavyweight, 300 trillion, and finally money in cash, 120 trillion. You can see that even though that Bitcoin is currently a $2 trillion plus global monetary system, we're going to be seeing the trend of demonetization. What do I mean by demonetization? I mean that Bitcoin slowly but surely is going to demonetize gold, most certainly, arts and collectibles and cars, most certainly, because if you think about the Gen Zs, okay, there may be a handful that might be enticed to buy that next Lambo or Ferrari, but the majority are not going to be concerned about that. They're going to be mostly focusing on digital wealth. And similarly, I would expect a form of demonetization of equities and stocks, not completely, but I think it's fair to say it's going to be a takeover in the equity space. And this is where I would see the majority of the Bitcoin demonetizing real estate, because for many of the videos that I've published in my channel, which is another reminder why you ought to subscribe in order to feast your eyes and learn more by watching these episodes, I've explained time and time again the differences in terms of its investment appeal between Bitcoin and real estate. And what we are seeing slowly but surely, even the boomers out there, when they worry about how to transfer their wealth to their Gen Zs, to their grandchildren and future generations, they're not going to be focused on inheriting real estate, the brick and mortar houses, flats, buildings, castles. They're not going to be concerned about that at all. What they're going to be concerned about, as I said before, inheriting digital wealth. And for me, the ultimate guarantor or king of all digital commodities or digital capital wealth is Bitcoin. So we're going to see real estate prices going down because there's going to be a massive sell-off into the marketplace, which is going to be a good thing, particularly for Gen Zs who currently have the growing challenge to become that first-time buyer, just to live in, not to speculate or invest in. So that is a trend. That is quite clear. And it's not just me seeing it. There's other economists, even Bitcoin investors saying the same thing that I'm telling you now. Real estate is no longer going to be used or perceived to be that store of value or speculative investment vehicle anymore. It used to be, but not anymore. Instead, they're going to be selling off those second, third, fourth properties that they have in their portfolio, particularly those that are residential. They're going to sell those off and invest the proceeds into Bitcoin. So real estate are going to be taken over, particularly those that are residential, and certainly bonds, which is junk bonds, and money. So what I'm trying to tell you there is all that I've explained to you in terms of the growing evolution of Bitcoin Layer 2 scaling solutions. Well, this is all the more reason why there's a lot of fintechs now spinning up every other day in order to participate as another Layer 2 fintech provider for these solutions in the Bitcoin network, because it's $2 trillion today, it's July 8th, and there's that potential for it to be 10x, even 100x, potentially 1000x, and I'm talking about decades from now. So the potential exists, the investment appeal exists, not just for the Gen Zs, but also for the baby boomers and even for myself as a Gen X, particularly when I'm worried about how to transfer my brick and mortar wealth, the fiat wealth, into the digital realm, which for me, part of that has to be Bitcoin. So hopefully this episode has given you that picture as to where the Bitcoin ecosystem stands at the moment. It's growing, it's evolving, it's trying to operate and interoperate with other blockchains out there in order to grow and evolve their use case, their value proposition as that global monetary network, but not losing sight of the need to provide more innovative dApps and solutions to its growing user base. So that's all I'd like to share with you today. Incidentally, if you have enjoyed today's episode, please don't forget to hit the like button, to share the video to friends and co-workers, and if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time,